Hello everyone, and thank you for checking out this video. Apologies we haven't been posting much on YouTube recently. We actually had some problems with YouTube and it took quite a while to get them sorted, but we are back. We are able to post, and what a week to be doing it on. We've got lots going on in the markets. There's so much coming through on the latest commitment to traders data. I've got enough, I could fill an hour easily going through this, but I won't do that. I want to keep this as brief as possible, get to the juicy bits. This has been recorded on Saturday. We've got the latest data was released Friday night. I went through the data. As I say, there's lots of markets we could look at. Bitcoin, the Australian dollar, Japanese yen, the dollar index, the energies, crude oil, silver. There's quite a few I could go through, but I want to keep this concise. I'm going to be looking at Bitcoin, the Aussie dollar, and the Japanese yen. There's very interesting changes in the positions this week. I will of course begin into them all in more detail, plus the ones I won't be talking about tonight. I'll begin into more detail in our weekly webinar. It'll be on Monday night, streamed here through on the website. Monday 8 p.m. UK time. There's a webinar every Monday night, and of course I'll be talking about these markets that I'm giving you an overview of tonight in a lot more detail during the webinar. So if you want to hear more, join in on the webinar. I'll obviously be talking to the other markets that I don't have a chance to talk about as well. I want to start first of all with Bitcoin. We will begin with the seasonal chart. If we look at the chart of Bitcoin, and if you're a regular on the channel or any of the videos I've been posting pretty much this year, we've been following the pattern very closely. This year through Bitcoin, we've talked about the Q4 pretty much where we have a big outperformance in Bitcoin, and we're starting just right here. We're typically make a seasonal low around the middle part of September. We start to see it slowly build up and start to break higher before we get into that sweet spot and really start to accelerate in November. Now, if we take a look at the COT data and going back a few weeks, we can see if we just turn off the net positions here, and we'll actually just focus on the shorts to begin with. Going back a few weeks ago, and we've seen the initial break higher coming through the summer period, we've seen a big jump on the commercial shorts. Heavy short here, where we were seeing they were certainly hedging for that move to the downside, and we had the correction. It was a case of how long would they sustain and hold that short position in place. The hope would be, obviously, as we get into September, we would see the shorts drop down, and that would free up the market to move higher. It would show that they don't see that need to be hedging for a larger decline. So we started to make the low. We were around the 40,000 going back a couple of weeks ago, and it was nice. We wanted to see the commercial shorts dropping down. We want to see the longs picking back up again, and this week we see a big change. We see an 85% drop in the commercial shorts. Are back down, interestingly, to levels that we haven't seen since last October, when we were back down pretty much at zero. Drop down, and what that's telling us is the commercials here in Bitcoin don't see the need to hedge to the downside. They don't see that they need that protection for that move. They aren't buying in huge amounts yet, but what is interesting, again, if we just focus on the long side this time, if you look at where we were last year, they started to pick up just around this period in October, and they really didn't accelerate as we got into November and actually into December. They really accelerated as before we broke that higher. So hedging for that move to the upside. They are certainly buying in here, and I expect them to continue to do so, and I wouldn't be surprised if we see a new all-time high above what we currently get. So as it stands at the moment, seasonal pattern is in play. We've been following the seasonal pattern. The positions are now very much in line with what we want to see. Obviously, we don't want to see a change in that over the coming weeks. We want to see that the shorts stay at that low level. We want to see the buyers continue for another couple of weeks. You wouldn't expect them to follow buying right the way to the top, but certainly I think we've got a little bit of room, a bit more commercial buying, and I'd like them to take out the highs here off those buying. Looking at the chart itself, I say in a bit more detail, look at the daily chart. We've broken out of this falling wedge. Look at where I think we can get to. I have a conservative target. Let me just scroll down up here at the end of November into December, around the 88,000 mark, and that's low end for me. And if you're just wondering where, I'll not go into the detail of it, but just looking at structure, market structure, and the wave structure that we have, taking us up to around say the 85 to 90k mark, and that would be low end is where is what I'm aiming for. I actually expect higher, but that would be a low end of where we can get to towards the end of November. So a market that we've been following very closely, we've been adding into, we've been talking about it a lot in the on our weekly webinars. We've been waiting for the confirmation to come through from the positions, as that's exactly what we should be looking for. And this week is very much the first case. We have had the drop over this last few weeks in those shorts, but this week's big drop and the buyers coming back in is very much a confirmation of what we've been looking for. Another market as well that's been on the list is the Australian dollar. Again, a bit like Bitcoin. Seasonally, we starting to perform a little bit better. Haven't been following the pattern very, very closely, but one of the reasons why I like this period of strength, or potential period of strength in here, is what we're actually seeing coming from the Commitment of Traders data. We've seen over recent weeks the commercials have been buying heavily. We've seen that, and we've seen the market rally going back a few weeks ago, and we've been declining, and slowly you can see the price action slowly building in here, and commercials have continued to be buyers, while we've just been slowly building and not actually going anywhere in price really. We've continued to be buyers on the commercial side, have made a new all-time high, whilst the non-commercial speculative positions are actually easing off here. They're not really in control of the market, so the main money is flowing here on the commercial side and the long side. And very much they're hedging for a move to the upside. So Aussie looks primed. Chart structure needs to clear a few levels. I will talk about them in a bit more detail on Monday, but pretty much we are in line. I would like actually to see a breakdown in this market. I would like to see an exhaustion in sellers to really flush out those last sellers to get a nice position to get long. And that's been the case for a couple of weeks, but we've remained in the range in here. I'm looking for a move to the upside, and the positions are very much in line with that. The last market I want to look at is the Japanese yen, and the reason for that is because the positions here at the moment are very, very interesting. Unusual, but there's a lot of information that we can get from this if you can read the Commitment of Traders data correctly. This is futures positions, so a lot of you are probably more familiar with trading dollar yen. So I'll actually go to the dollar yen chart just to refresh. The futures is going to be inverse to what you're typically used to looking at. So we look here at the dollar yen chart. What we're essentially looking at, we've seen the dollar has been performing well against the yen. The yen's been one of the weaker currencies, particularly since we've had this recent break higher. And we've come up against the big level here at 112. And whenever we had this break, I was anticipating a move and the run to at least a 112. And then it's a case of how traders would be positioned to tell us whether we're going to break through that level or actually bounce and reject it like we've done in the recent past. I talked about this last week in webinar, and I'd felt that we would actually take a run to the 112 again quite quickly, and I was anticipating that we actually break it, and that's still my view. My view at this point in time is that we break 112 and that we should remain sellers of yen, so buying dollar yen, maybe looking at Aussie yen long, Kiwi yen, CAD yen, but essentially looking to be on the short side of yen. There's a few levels we need to break here just to confirm this and clear these levels. But as it looks at the moment, I think we're heading towards this upper end of the range, up towards the 114.50, maybe towards that 115 area. And the reason for that is, if we look again at the data, respective positions pretty flat here. So what we're really focusing on is the money flowing in, and so on the commercial side, they have been buying. And as I say there, because we're looking at the futures positions inverse, so buying here would be dollar yen moving short, which would be a nice signal for a bounce off that resistance at 112. They have been buying, not extreme levels, so we've been higher, but they have been buyers. But what's really interesting is the fact that they are still selling this, and still selling at fairly significant amounts. What you really want to see is, if we go back to where we were at the last one of the significant lows we had in here, you see the strong buyers coming into the market, heavy buyers coming in from the commercial side, anticipating that they're protecting for that move to the upside. And you notice they're selling. They're not selling this market. Their selling positions are actually getting cut, and they're maintaining a very, very low level on the short side. Going back a few months ago, say we were in a very similar position back here, and that's not seeing the need to hedge, similar to what we just talked about in Bitcoin. So really, really low levels of selling, don't see the need to hedge to the downside, and we did actually get a move higher. But we've actually continued to advance back into this market, even though we haven't been higher. We're actually breaking that low, and they're continuing to be on the short side. So they're happy to buy here, because obviously it's a nice level. It's a cheaper point that we've been in for quite some time, but they're selling in here is telling us that they still see the need. They still need some protection for a move to the downside, and that's why they are in here on the short side as well. So really, really interesting the way the positions are developing. A few markets have seen this recently, but it's something that's really, really easy to miss. A lot of people that are looking at the COT data would probably focus on the longs here and the fact that they're one of the highest levels they've been for quite some time, but you're missing the subtlety of the fact that they are selling. And they're selling because they still need to see the need to be hedging on the short side. So my view is to still stay short yen. I would expect over the next coming weeks to see the longs increase, possibly push up towards that 200,000K mark, maybe make a new all-time high, and then we'll see the short contracts roll over. At that point, then I would be looking to be on the long side of yen, so looking to be on the short side of dollar yen. But the likelihood at the moment, looking at the price action, is we're going to break through what is the support here, or the resistance at 112. And move to that lower level, say, which would be the higher level around 115. That seems to be the likely scenario at the moment based off the positions. The dollar will have a lot to say on this, and this week's positions in the dollar index is interesting. I say it's not confirmed. We're just attempting to make this break, but price action is very much in line with what we're seeing in the yen data. The yen data is supporting a break higher. We just need to see the confirmation of that. So we get a confirmation and breaking and clearing through these resistance levels. I will continue to stay short yen, and my primary targets at the moment are looking to be long, like the dollar yen, Aussie yen, CAD yen, etc., in order to be on the short side of yen for the next coming weeks. I hope you enjoyed that, guys. I say I will go into a lot more detail on Monday's webinar and cover the other markets as well. But certainly, yes, there's a lot of markets looking very interesting, and it stands at the moment we hopefully can have a really nice end to 2021.